Welcome along to FTUK's Non Farm Payroll live stream. It is Friday, the 6th of June 2025, and hope you've had a good week in the markets. Hope all is well with you wherever you are. We've got the jobs data for the month of May out of the United States hitting the wires in just under 15 minutes time. There's lots of people in the chat on YouTube today, and that is good to see. Welcome. It's good to have you all with us. Good morning to you in the States if you're joining us, and good afternoon in Europe if you've just had your lunch. Good evening to you in Australia and Asia, wherever you are. It's good to have you with us. Jobs data today. I can't believe how fast it comes around. I think today is going to be quite an interesting one in the sense that I feel I've got a lot of certainty around what I'm expecting from the numbers, but I think some of the data itself is a little bit muddy, so it's going to be a little bit difficult to unpack. We will definitely do our best. Plus, we've also got some fantastic accounts to give away as well in the stream, and you can still win one as well, and we will go through all of those details. But yep, Non Farm Payrolls is here yet again, so let us jump straight in and get on with it. We are looking for 130,000 new jobs out of the United States over the month of May. And yeah, that's down from the previous 177,000. Now, it's very, very soft. The expectations are quite soft this week, and that's really because of the bad ADP data that we had earlier in the week. Jolts, however, was a little bit different. Unemployment, though, I mean, look at that. 4.2% is just flatlined. We've not had sort of any meaningful moves in unemployment up or down in the last in the last few months. So it's not particularly it's the sort of thing that can come along and really change things, but it's not expected to move today. 4.2%. Those average hourly earnings, though, as well. Look at those. That's a bit of a sandwich number in itself. You're looking at a year-on-year rate that is moving down slightly, 3.7 from the previous 3.8, but the month-on-month reading, that is expected to move up a little bit, 0.3% from the previous 0.2. So in itself, you know, the expectations are looking quite soft. Now, where's that really coming from? Well, it's come really from the fact that the data out of this week from Jolts and ADP has been pretty mixed. Jolts itself, and I'm on the side of the Jolts as well, this was a lot higher, 7.391 million. And that is up from the previous reading of 7.2. And of course, this is a government statistic. The quits as well, they were lower as well, 3.194 million from 3.344 million. So more jobs than expected. That's good to see. Less people quitting. That has got to be good for growth. And of course, jobs data is a massive barometer helping bolster growth throughout the economy. So it is, yeah, it's good to see. But look at the ADP number. That ADP number was not good. Previously, we were looking at 60,000 and it fell to 37,000. And this is where the softer expectations have been coming from. The forecast as well for this week was 115. So you can see how far apart the market expectations were with what we actually got, and that I think is what is driving non-farm payrolls today. Now, I'll paint out the details around that, what I think is going to happen, and that in itself can be, I don't know, it can be hit and miss sometimes, but I will definitely do my best. However, if you think that you know the number, you still have time to enter our giveaway competition. This is the best composition giveaway that we've ever done in any non-farm payroll live stream, and you could win a 50k two-step account for the first prize. All you need to do is head into the link in the description on the YouTube video, click on the link, and there's like a form in there. Go to that, fill in all the details and everything, stick your guess in of what you think it's going to be, and then as soon as the number is released, the guys in the back office will find out who the winner is and will announce it in the stream. So you could be walking into next week with a 50k two-step account completely free. And the 50k two steps, these are the coveted accounts. These are the accounts that everybody wants. So first prize is a 50k, then you've got a 25k for second prize and a 10k for third prize. 3 amazing accounts. So good luck to everybody. You still got time. Head into the link in the description and hit the button and away you go. It is definitely a good prize to get. Now, also as well, I must not carry on without saying, please do subscribe to our YouTube channel. It's growing all the time, as is with our Twitter profile and our Instagram page. And so please do subscribe to the YouTube channel. It definitely helps us all out. And of course, we have the best Discord anywhere in the prop industry. Head over there, scan that QR code, and go speak to Reza in Discord, and he will sort you out with all the latest information information and the stuff that's happening at FTUK. So we've got just under 10 minutes to go. We'll have a quick look at some of the markets, but I want to just run through some of the basics so that everybody is in the loop. Non-farm payrolls, obviously, it comes around every single month. You've never seen it before. It's a big government statistic out of the United States. First Friday of every single month, and it covers everybody except farmers and people in private households, anybody in a non-profit organization, or if you're active in the military, or you consider yourself self-employed, then you are not included in this statistic. It comes from the Bureau of Labor Statistics. Riveting read. If you fancy dipping in over the weekend, there is the website address on the screen for you, www.bls.gov. Yep, it's definitely worth it. You'll benefit as a trader by studying this stuff, that's for sure. 80% of the workforce, of the US workforce in this statistic, are contributing to GDP. So it's so important. It gives us a deeper understanding of the health of the overall economy. Definitely it's something that everyone should pay attention to. And you have to, because the markets will move. If you're creating a lot of jobs in the economy, you are supporting the economy, you're supporting growth. That should be the theme at the moment, is that is positive for risk assets, and that can then give you an upward forced pressure on inflation. That would make you hawkish. Hawkish would mean you'd want to increase your interest rates to counter the inflation, or you would essentially not look at cutting them. That is the way that the framing on the market is built at the moment. On the opposite side, this is where a lot of the market expectations are positioning for today's non-farm payrolls. If you are not creating a lot of jobs and you're not creating the conditions for jobs, then that is seen to be negative for growth, negative for risk assets like the stock market, less inflationary, and therefore you'd be dovish. You'd be looking to lower interest rates to sort of build a bit of that inflationary pressure back into the system, or you'd be printing money, you'd be stimulating growth in that sense. So you get the idea. Now, these are the themes for this week. These are the things that I think are going to be particularly important. There's been two big, well, obviously we've got non-farm payrolls today, but we had the ECB yesterday, and they cut interest rates. They cut interest rates by 25 basis points. And if you look back at a chart, we'll get into the charts in a second, but if you look back at a euro-dollar chart over the last year, since they started cutting, I think it was last June, last July, you'll see overall we've had that upward lean. You've got to remove the dollar component, so cross-reference it against a few different other currencies. But you see that overall that has been bullish for the euro. Now, in the press conference, Christine Lagarde sort of changed course a little bit, and they basically hinted that they were maybe not going to be cutting in July. That's quite a significant change. So we've got inflationary pressure is starting to decrease overall in Europe, and that is essentially because of this stronger euro in the economy and cheaper oil prices. If you have a stronger euro, obviously you make it more expensive for people to buy things from your country, and therefore they don't buy as many, and therefore that brings inflation down ever so slightly. So that strong euro has had a factor in what is going on, no question. Now, I think that this is where it's going to start to get quite interesting, because essentially we are positioned now where, from an ECB perspective, a stronger euro is potentially starting to come into question. Now, I'm a bit obsessed with euro-dollar at the moment, and I want to focus on euro-dollar for today's non-farm payroll stream, specifically because of this, because we've been reading it quite well, and in the last week or so, it's gone a little bit sideways, but I'm convinced that we are going to get some downward pressure on the euro-dollar rate, and these are the right conditions to basically create a topping out effect in that euro. Let's move that on, and let's look at today's non-farm payroll in terms of how we're going to be viewing the dollar. Well, softer expectations across the board. We're looking for 130. It's an important it's an important time for the US economy as well. And lower jobs, with what they will do, if we do get a lower print today, that will add pressure on the Federal Reserve to cut, and that essentially is going to keep the dollar on the weak side. Now, this is the thing. If we don't get that, the market is expecting a lower number, but if we don't get that and we get a stronger number, and I think that we might get a stronger number, what that will do is it will give us a sense of dollar strength, and that dollar strength, particularly in markets like euro dollar or the pound against the dollar, are positioned just right. Really, really well positioned. So currencies like anything against the dollar, we'll go into the charts in a second and have a look, and you'll see exactly what I mean. So I am thinking that we're going to get a stronger number. But, you know, my ability to predict these things is just as good as anybody else. So what do you think? You've still got time. You've got 5 minutes to get your guess in. I'm going to go for north of 170 today, but we will see. So what we did this morning is we put a poll out on Twitter. We put a poll out on Twitter, and let me just see if I can get it up on the screen, the actual Twitter feed itself. There it is. You can see. There's our Twitter profile. Looking very, very smart indeed. And there is the poll there. So there's 45. Let's see if there's any more on there that have refreshed since we started. And we've got 45 voters on there. Now, this is what everybody on Twitter that follows us thinks. So we've had, it's really quite balanced. Just ever so slightly more people at the very, very top thinking above 170. Now, I think that we potentially will go above 170, but the people following that ADP, because of the jolts, you see, but that ADP has definitely dragged those expectations down. And we've got certainly a sizable, in fact, the second group of people there, 26.7% think less than 130. That in itself is quite interesting. So if we're going to get that, then we're obviously going to get we're obviously going to get a weaker dollar. But if in terms of when we look at the charts, you'll see in the euro dollar rate, you know, how much more weakness are we going to get from a weaker number here? I'm not quite sure there's a lot there. So the surprise, and that's where the opportunity may lie, would be if we did get a big number. Now, historically, over the last few years, definitely non-farm payrolls has had an ability to really surprise the market to the upside quite persistently. So, you know, it's definitely something that could be there. So we've got 28.9% think above 170. I'm in that camp. Less than 170 is 22.2, and then it's even split with just slightly more than 130 at 22.2. We will see. It's an interesting time in markets, that's for sure. Right, so let's have a look at the quick look check on the markets, and I'll show you what I mean. Look at, you can see the euro dollar rate here. Got 3 minutes to go, so a quick bit of analysis. I want to focus on euro dollar because, and let me just show you for why. You can see here, we did a really good read on the euro dollar. This is the daily time frame. You can see that head and shoulders, which played out to perfection. Now, I honestly, genuinely felt that dollar strength was going to come in a little bit earlier, but it hasn't. And I was looking, you see what we tagged here the other day. This is the ECB, the spike on the ECB from yesterday. You'll see, I'll show you in a sec, we really tagged a beautiful area at the top of the move down from this head in the head and shoulders. So if I just go down to a 1 hour now, you'll see it there. Look at the top of this leg. That move down from the top of the head and shoulders. Just drop that in there. You can see 2 minutes to go. Look at that. Look at the tagging on that. Really nice. So if we get a weak number, I think that the actual limitation on euro dollar will be quite contained to the upside. If we can get it, you should get a weaker dollar if you do that, which means euro dollar pushing to the upside. But I think it should be relatively contained. So the stronger dollar or the stronger jobs print should give us that push down on euro dollar. Now, I actually thought that we'd be well contained within this area here, this 113.75 down to 113.38, something like that. I thought that would be the enough to create the resistance in the market to contain it so they could push to the downside. It's not happening at all. You see, we bled quite nicely above there. So if we stay above there now, it's probably not due yet. It really probably isn't, but I think it's it feels like it's the right trade, but it's whether the data agrees with it, and we're not gonna know that for, well, we'll know in a minute's time, basically. So yeah, quick check on the S&P 500 as well. Yeah, you can see there on the S&P 500. Yeah, so we're just reaching that point now where we're really pushing it. Look at this here on the S&P 500 from the top there, from the all-time high. Look at this doji here. Look how much that has contained. That's from the end of February. Look how much that has contained the price action over the last week or so. Look at that. It's really, really strong, you know. So 20 seconds to go. Time to quieten down. I'll get it back onto euro dollar because that's where I see the market. Okay, 20 seconds. What's the number going to be? Here we go. 139. 100.
Private payrolls 140k, average hours worked 34.3 is in line, participation rate of 62.4%, 2/10 lower than prior. Canadian employment change plus 8.8k, the unemployment rate 7% in line. The Canadian participation rate 65.3% unchanged. So an NFP 139k is a 9k beat, although the prior has been revised down 30k to 147k. The average earnings number a tenth higher month on month, 2/10 higher year on year. Unemployment rates in line.
Unemployment is in line. Yeah, so just slightly above the expectations. So the market read it right. So that ADP was the right one. Now I would say this volatility that we're getting to the downside now, I would not be looking to get well. It's not up to me to decide what the best play is on these kinds of markets. But for me, the bearish on euro dollar right now is probably looking a little bit it's not playing out the way that I would have wanted it to. Let's just quick check on gold as well, because that should be. I see we're looking decidedly bearish. We get under this 3,345 level. You know, that would give us quite a nice move to the downside back to this area of support here at 3,315. But that number doesn't agree with me on that one, so I would be looking for some sort of like containment on that one for sure. So yeah, interesting one. Not what I was looking for, not what I wanted. I was hoping for a surprise, because when you get a surprise like that, if there had been a number, then you would have got a lot of volatility, and that would have given us a really, really nice trade. But that's the way it goes. You've got to play these things as they actually occur. So it could be the resistance that we saw originally. The resistance that we saw originally in this area, because the fact that we're now above there, should now be acting as support. So I maybe have to change my view on euro dollar in a meaningful way, and think that maybe we're going to go on a different course over the course of the rest of the summer. Who knows? Not exactly what I was expecting. Interesting though. That's Non Farm Payrolls for you. And then obviously we've got our competition as well. We've got our giveaway competition. We've got 3 accounts that are available for to be won: a 50k 2-step account, a 25k 2-step account, and then also a 10k 2-step account. But before we actually reveal who the winners are, because the guys in the back room are scrabbling away going through the data, we had a lot of entrants on this one. Before we actually do that, what I will do is I will let you know about our weekend offer, which is a fantastic offer that you can grab yourself an account over the course of the weekend. It's a 30% discount this weekend on all of our accounts, all of our trading programs, and you get a 20% profit booster on the instant funding. That is one of our core add-ons, which is very, very popular. That is thrown in on this deal, so you get an extra 20% on whichever profit, on however much profit you actually withdraw. Or if you decide to go down the route of the challenge account, then you can also get a news trading add-on, which is obviously helpful for things like non-farm payrolls. Excuse me. Or the Federal Reserve is coming up in a couple of weeks as well, and so that is definitely a good add-on to have on your account if you are going to be trading news. So yeah, grab yourself a 30% discount this weekend on the checkout. All you need to do is put the code in June 30, and everything will be done automatically for you on the checkout. Good stuff. Right, let's go on to the discuss the winner, the winners of the prize draw. Let me bring up the right information here so we've got everything. Here we go. So the winners are, there you go. We've got the winner of the 50k 2-step account is Adacoin Live. I presume this means a Cardano trader potentially. Congratulations to you. You can trade your Cardano, a cryptocurrency, with a 50k two-step from, anytime, because it's 24/7, isn't it? Cryptocurrency markets. The second prize, the 25k two-step, that goes to Amansis. Congratulations to you. Well done. That's a great account to have. And then also as well, the 10k two-step account that has been won by Abdullah Mumin 17. Congratulations to you. That is fantastic and well done. So all three winners were there. And you've obviously, I don't know what the numbers of the actual guesses that you were, but you were probably in line with most market expectations. That's not a bad thing to be, for sure. Goodness me, another non-farm payrolls, all done and dusted. It's good to see, and it's good to do the giveaways as well. A lot happening at FTUK over the course of the next few weeks and few months, not least of all the fact that we've got futures trading coming up very soon. I am very, very pleased and excited to announce. It's going to be very, very fantastic to get that kind of level of trading involved in FTUK. So please do stand by that social media account, all our Twitter feeds and our Instagram feeds. Pay attention. Get on the email subscriber list as well. You get all of the main news and everything that's happening at FTUK first into your inbox. Thank you very much for joining us. Congratulations to the winners of the accounts, and we will see you all next Friday.